Kenya, and as an anchor, support channels for our Pan-African expansion agenda while delivering on our overall growth agenda. Our newly acquired subsidiary, TMB, in DRC has come in strong drive to this ambition. The group is now better positioned to support Pan-African trade. You know, I was used to better pieces of paper than these. And we'll have to do that with KCB under the various trade blocs and covenant, including the African Continental Free Trade Area. Ladies and gentlemen, the year 2023 marked the start of a new era as we ushered in our new broad purpose: for people, for better. Earlier this month, the group unveiled its commitment to this purpose, as it commemorated its 127th year of existence, more than a century. The commitment was made via an ongoing broad campaign, which is dubbed as Opening Doors of Opportunity, that speaks to the very core of who we are and what we stand for: a financial institution that is passionate about improving lives and creating positive change. In this regard, the group board has approved a new strategy dubbed Transforming Today Together for the period covering the period 2024 through 2026 to further propel the transformation agenda following the successful implementation of the Beyond Banking strategy cycle, which lapses this year. Ladies and gentlemen, KCB Group continues to spearhead and mobilize support for various citizen-driven engagements across the region, helping to build thriving communities wherever we operate is a vital part of the way we work through the citizenship agenda. We believe in developing the local economy by building the resilience of our people and societies, a situation that has seen us get actively involved in both public and industry-led initiatives geared towards transforming our societies, to demonstrate that we are not just there for the profit, but for even the social profit. Our most recent engagement was during the National Tree Planting Day, when we joined other public and private players in planting 8,000 trees, seedlings. Such efforts complement our own KCB leader meeting, under which we have a target of planting 1.5 million trees by the year 2025. Through the KCB Foundation, we continue to roll out interventions in education, training, and employment for young people. Launched in 2016, the Tujiajiri program has created 119,000 jobs, while 22,959 youth have received technical and entrepreneurial training. On education this year, we gave 1,000 scholarships to needy students, to join various secondary schools countrywide. We remain, ladies and gentlemen, optimistic about the East African economies in her medium and long-term potential, given the various interventions that our governments within the region are put in place to support economic recovery. This should help lift all aspects of the economy, including the financial capital and the financial markets. The priority is to harness investment and consumption drivers to accelerate the pace of economic recovery and growth. As growth gains momentum, it will lead to many more opportunities for all sectors to thrive. As I conclude, it is refreshing to know that we have delivered a strong set of results, driven largely by a focused execution of our mandate as a prudent lender. We are confident that KCB Group's strong financial position will provide a solid base for the bank to support the expansion of cross-border trade, meet the entrepreneurial needs of our people, and deliver on the commitment to uplift communities. This should also translate to better value for investors in the stock market. With those few remarks, it is now my distinguished honor to invite Paul to make his presentation, and I will later take any questions that you may have. Thank you, and God bless you. God bless KCB Group.
Hii ndio shida watu wafupi. You'll operate from there. That's fair enough. Thank you. Thank you, Chairman. And it's good that you started on that note because fortunately we can't afford those hard papers because we are in serious cost-cutting measures as required by the investors. So Chairman, it's reflective of how management is following your guidance to cut cost. Ladies and gentlemen, good afternoon. Allow me to just give you a heads up. Because we've been trending in some instances and it was reporting period and we were not able to respond to those queries because we respect the law, we are bound to say a little bit more than usual. So this has to be our platform. We couldn't respond to all those queries on Twitter. We couldn't respond to why the share was heading that direction. So this is our platform. So just a little bit of heads up that be a little bit longer than usual. When you have a regional powerhouse, an institution that is 127 years, since 1896, there's a lot to say. When you're operating in Kenya, Tanzania, South Sudan, Rwanda, Burundi, DRC, you have a lot to say. When you have 33 million customers, you have 598 branches, and you're building agencies about to get to 35,000, you have a lot to say. This is about a world of possibilities. The KCB brand is about for people, for better. And therefore, I just think, take a step back, and I'll talk about the purpose. Take a step back and talk about, where we are. KCB Kenya, and I'll use this chance to introduce the board members and management as well. It's 100% owned by KCB. The chairman of KCB Kenya is Lawrence Njiru. I can see Njeri Onyango. I can see Simeon Rono. I can see Joe Muigai. I can see Caroline Rabar, sorry. Who else? I can see Anastasia. I will introduce you later, Anastasia, who is MD. I can see Eunice Nyala. Any other board member that I might have left out for Kenya? We have Ethiopia Rep Office that is managed directly by the Kenya corporate team. It runs most of our trade business there. We have National Bank of Kenya, the interim chairman. I can see John Zomo is here. Who else have I seen in National Bank? Anyone else who is national? Yeah, I can see Director Lina in the room. Director Lina, thank you for coming. Director Laban has just come in time for introduction. Thank you, Director Laban. Anyone else? Where's George Odhiambo? I'll also introduce you later. George Odhiambo, the MD. Thank you. KCB Bank Tanzania, I haven't seen the chairman who is representing KCB Tanzania, other than Cosmas. Cosmas, you are there, the MD, as well as we have a number of board members in the room. Rosalind, where are you? Rosalind Gishuru, who is a board member in KCB Tanzania, and we have Anuja Pandya, who is also a member. KCB Bank South Sudan, we've got the General Karangi, retired, who is the chairman of KCB Bank South Sudan. Thank you, General, for making time. I've seen Roba, who is the MD, Thank you, Robert, for joining us as well. Is there any board member that have left for South Sudan? KCB Bank Rwanda, I saw my chairman, George Rubagumia. Thank you, Director, for joining us. And Patience, where are you, the MD of BPR Bank Rwanda? KCB Bank Burundi, Masika seems to have been working here. Anyone seen Masika? But I see the chairman of KCB Bank Burundi, Joe, in the room. Thank you, Joe. KCB Bank Uganda, Director Constance should be here, the chairman. Director Constance Mayende is there. Thank you. Edgar Biama. Edgar Biama is our MD. Thank you, Edgar. TMB, I'm told that flight landed the one that was taking landed at 3:30. Yeah? So they're just waiting for the results to be released. Okay. Hopefully they'll join us as we go. What is important is we also have a Brussels office in a rep office, which is fully owned by TMB. KCB Bank Assurance Intermediary, I think I've seen the chair. The chair, Alice Kerenge, is here. Anyone else who is in KCB? Agri, the MD of KCB Intermediary. KCB Investment Bank, where is the chair of KCB Investment Bank, Eunice Nyala? Where's the new kid in the block? Morris. Thank you, Morris. Morris has come from competition. Many of you will know him from another bank that I will not name for now. Thank you, Morris, for choosing to join us as the MD of KCB Investment Bank. KCB Asset Management. Who is the MD in KCB Asset? No, not the MD. Who is the chair? Director Nzomo. Thank you, Director Nzomo. And Victor Odendo, who is our MD for KCB Asset Management. The directors of Kencom House, you know yourselves, starting with you as truly, Lawrence Kiambi, as well as Charles Lagat. But it makes money, eh? So please don't laugh, it makes money more than other banks. So thank you guys for running KCB Kencom House. I think it's just very important. It's preliminary. Please just stay on course. Just stay to that other earlier slide. Just go back to where we were, please. There. It's important to just highlight the brands that that KCB runs, lest it is forgotten. When you see KCB Bank, what you're seeing here, those are the banking institutions, whether it's Kenya, Tanzania, Rwanda, Burundi. That brand, KCB Bank, represents those entities. National Bank represents National Bank of Kenya. BPR Bank, what you're seeing as BPR Bank, represents KCB brand in the market in Rwanda. TMB, we said we are not changing the brand for 2 years. That's TMB brand. It's 85% KCB, just so that there is no confusion here, Madoadoa. KCB Asset Management have introduced the board. KCB Bank Intermediary, you'll see their performances, as well as KCB Investment Bank. So that whole bouquet is KCB Group. Next. Next, please. Now that you've chosen to lead. I think it's important to just highlight, Chairman, before I go into this slide, to say, one, we thank you and congratulate you for this opportunity, and being your first time here, thank you for taking up this opportunity. But it's also the first time that we are having an open session, and I think it's important to recognize former Chairman Andrew, for his contribution for the 5 years. I think it's important to highlight that for 5 years, which is the maximum term for our chairman, Chairman Andrew did an amazing job. And for that, let's give him a round of applause in absence. Chairman and all stakeholders, we've got tailwinds. Most of the markets are projecting strong GDP. And sometimes I think we read so many other things, particularly in the social media, you forget the numbers. And I think we also become experts, and I think, Chairman, you reminded us this morning not to be experts of everything. So very strong GDP growth. Right? I think Kenya was coming from 4.8, projecting 5.3, 2024 looking at around 5.7. When I look at Tanzania, you're looking even at 6.1. I was looking at data for Rwanda, projecting 7.0. So there could be headwinds, but there are opportunities, and there are positives within that. So we believe that across the region, in the markets that we operate in, we see opportunities. We've rolled out risk-based pricing. It gives us opportunity to make sure, and we see that as opportunity for us to be able to lend to parties that we were not able to lend to before. I think that's the most important thing. People ask me, Paul, is risk-based pricing about increasing rates? No, risk-based pricing is about being able to correctly price risks that we didn't have appetite for. And that's where we see the opportunity. And I'll come to introduce team members. So people like Angela and John Mukulu here, who run our credit models, now have opportunity to be able to help us be able to lend to those parties at the right risk pricing. You know, there's a lot of anticipated decline in interest rates. And every time I look at this, people ask me, Paul, but we are seeing, even infrastructure bond was 17 yesterday. Where are you seeing this thing coming from? So you either do business for here and now, or you do business for the long term. And therefore, we see that easing up in H1 2024, and that's our view. And that's how we want to run this. But there are headwinds. And I don't want to belabor the fact, the depreciation of the shilling, particularly for Kenya, has caught us, and you will see it in numbers in many organizations. All budgets, people planned, Lawrence, around 130 worst case scenario. Some people planned with 128. I saw today people saying it's touching 158. I have no idea when, Anastasia, which one you use. Is it 158, 160? But that has become unpredictable. But with that, it comes with challenges, particularly on the credit book, on facilities that are dollar denominated. And it's not a KCB issue, it's not a one institution issue, it comes in with a challenge for banking. There are obviously fiscal pressures, and I think disposable income shrinking, and I'll speak about it at one slide. It's a reality. So it's people are going to have to prioritize on what that is. But then again, we are seeing geopolitical risks. You know, the other day we were talking about, and still talking about Russia, Ukraine. Now we have Hamas, Israel. Nobody knows where the other one is going to come from. More than ever before, we have to be agile and be ready to confront things that we've not been able to predict. And that's why I always say, to be able to deal with these tailwinds, three things are going to be important. Because I think my chairman has taught me since he joined. So Paul, it's good to have problems, but what else? What is the solution? So three things are going to be important. And I want to patent this. One is people. The quality of people you have in the organization, the ability of people that you have in the organization is what is going to make a difference. And we are proud in KCB that we're going to make sure that we prioritize that element. It is the quality of talent, the agility of talent, the culture you have in the organization, the power for those people to react, the power for them to scrum, because it's no longer predictable. That's very important. That's number one. Number two, technology. To be able to deal with these headwinds, not just to lower costs, but to be able to serve, to get value out of investment, to be able to get value of the region, technology has to be at the core. And therefore, as KCB, we've made investments, but we have to make sure that we've optimized that investment. I don't know whether, I know I'm going to introduce guys later, but I hope our GCTO is in the room. You will be mentioned a number of times, and you might even be asked to come here. But at the heart of it is going to be technology. The third one is partnerships. You want to succeed in this environment? You want to succeed in future? You have to get partners to work with you. That will bring expertise in different areas. There are things you don't have to do, but together you're stronger. Now that partnership can be internal, but it can also be external. So if you ask me how we're going to react to those tailwinds, headwinds, it's going to be around those three things. And those three things must be anchored on customer obsession. At every single delivery of those three items, the rock base is customer obsession. And when I talk about customer obsession, it's being deeply consumed about doing what is right for the customer here and now and in the future. So if you have a rock solid bottom of customer obsession where everybody's aligned to that, and you've anchored those three pillars, there is no reason why we cannot transform today together, which is our anchor for the strategy of 2024-2026. Ladies and gentlemen, 127 years is not easy. And if you look at the history of KCB, it has had lessons. It had had times when it was rock bottom. But one thing that you will see from the time it was at its lowest, what has been strong is the governance. And when I say to the team, is we are lucky to have the jobs we have today. We are lucky to be in the opportunities that we have today to make sure that we don't let down those that were there before us. And that governance is at the heart of the success of KCB. So I've always said we work for the shareholders. We just don't do anything that we need to do for the shareholders. We'll do the right thing for a sustainable organization. We've made tough decisions, and I'll come to them, sometimes that have hurt the shareholders, particularly half year, but we're doing it for the long-term sustainability of the organization. We have a board of directors, and I know I haven't introduced a group board, which I'll do shortly. We have 11 directors. We have two executive directors, Lawrence and myself. You've seen the chairman. The chairman of Kenya, Lawrence Njiru, is a board member of the group. Director Nuja is a board member of the group. Director Alice is a board member of the group. Director Mohammed is a director of the group. Anyone have left? I care about my balance scorecard. So I don't want unintended consequences. Those are the ones that are in the room. Thank you for making time to come in. I think we do have, 2 vacancies that we are concluding. Those members who work with the committees, it's delegated mandate, and it's important I stress this because it is what makes the difference between KCB and others. As a CEO, I delegate delegated mandate. I execute delegated mandate from the board, but through the committees of the executives. So we have group executive, we have assets and liabilities, we have operational risk committee and compliance, but we also have a management credit committee. Just to give you comfort, I only sit in 2 of those, 3 for the group. But one of the main things that has changed since the last time we briefed yourself is we hived down KCB Kenya. So KCB Kenya runs as a subsidiary on its own, different from the way it was when the group CEO was responsible for KCB Kenya. So allow me to introduce Anastasia Kimutai, who is the managing director of KCB Kenya. It's been baptism by fire. And obviously the other team members in the room for KCB Kenya. So KCB Kenya today runs independent. They have their executive team. We hold them to account. Isn't that good that you can sit and you hold KCB Kenya to account? And the way it's big, eh? Right? Let's move to the next, if you don't mind. So I think I've talked about that. One of the things that also makes us different as we move to the next slide is for every single subsidiary of KCB, there is a group board member and there is a group executive as a member. That is to make sure there is a direct linkage and alignment between the group and the subsidiary. Creates an alignment. But let me talk about, there's been a number of issues, and today I'll be a bit direct, so forgive me. It's not the bandit in me, but I'll just be a little bit direct. So there was a paper that said we were number 6. I said, Allah, have they released results? But I just wanted to point out the shareholder profiles of KCB. And you can see, even with the reduction in share price, 2 elements were in play. Foreign investors down 0.51%, and local individual down 0.08%. And we've got, you can say relatively, others going up, National Treasury remaining as it is. So I think it's important, I'm saying local institution and, my apologies, local institutions and foreign investors. Actually, local individuals went up. Right, and people ask me, Paul, and there's a specific gentleman who asked me, why is the share price going down? I wanted to comment because I'm on Twitter. Then I realized it's reporting period. But let me just say a few things, and I'll be very direct. One is obviously, when you look at individuals, the disposable income is going down. But that's not a major issue. Foreign investors down, on average, 42-45%. They're getting out. But the other fundamental issues, and I want to speak about them. When I speak to investors, they tell me, Paul, we are worried about your NPL. I said, yeah, but we were aggressive. We were the first to make the right call. I am glad as I stand today, everybody is starting to see the direction of travel. Sometimes, I think there is that saying, don't fear going where nobody has gone. At least you leave your footprints. And it might guide somebody else when they come later. We took a conscious decision. It's the right thing to do to be aggressive on our provisions. And then we can handle the problem. It's one thing to shy off from tough decisions. It's another thing to make the tough calls. So today our business is to reduce the stock. It's no longer about dealing with other things. Everything else you manage is normal upgrade, downgrade, burn, isn't it? But we are clear on the stock. The second thing is, I said, Paul, but your performance was below expectation for half a year. I say, yes, it was. But I would rather deliver bad news up front and start delivering better news for you. So we got punished because we went up front on that performance. Hopefully, Lawrence, when you speak to the numbers, then they'll give us a benefit of doubt again. And therefore, you can control the inputs going forward. The other point that I think, investors tell me, Paul, that's why we think it's lower, is because they looked around. They saw the capital for KCB Kenya was thinning. And they were very sure that we are going to declare dividends interim, because we always declare dividends interim. Now that hammered us twice. Right? You don't declare dividends, they say this is the first time you have not done it, they punish you. Lawrence, I said I'll be bold on this session. But we're building a sustainable organization, making those tough calls up front. Protect capital for the future. So that interim and zero interim dividends did shock people a little bit. I think it's the first time. Even COVID period, KCB paid dividends when nobody else was paying. The other one, which I'm going to be a lot controversial, is investors told me, Paul, what is happening? NPK 3.5 billion loss. George, half year. So the NBK performance is playing in the minds of investors. And I know today I don't have an answer for you on NBK, but I can assure you when I stand in front here, next time I'll have an answer. You have a detailed review that has been commissioned by the board, and we are going through that. It can't be business as usual. So they gave us a benefit of doubt when we started making profit, George. Then when they saw the loss, they took that benefit of doubt. They said, we told you not to buy this thing. We went ahead. But it is our child. It is in our books. It is our problem. It's my problem. I think finally, and this is bold for me to say, is proximity to GOK. We were seen to be very close to GOK. I say, hii imechukuliwa na serikali. I don't fear saying these things. So investors say, Paul, this institution is getting too close to. The first one is they said Hustler Fund, that the NPL of Hustler Fund is by KCB. We do not have a single exposure on Hustler Fund. Not a cent. In fact, I think, Angela, we've made only 58 million from Hustler Fund. 50 something, thereabout. We're purely going to facilitate that. We're making sure we don't lose money, but we make money out of it. Fully funded by GOK, but it was partnership. You remember the 3 pillars I talked about? People, technology, partnership. We used those 3. We had very good technology people. We had very good technology with idle capacity. And we had partners to work with, the telecoms, to deliver Hustler Fund. The money was not ours. Isn't ours. So I saw somebody on Twitter when I told them, but we don't have an exposure. He said, no, you're hiding. But you see, my friend, I don't have to go to top of Kencom to tell you a fact. I just have to tell you the fact. The second one is obviously the famous KNTC. I can assure you, we are working to make sure that there will be no exposure at the end of the year, fully settled on KNTC, done, dusted. Lessons learned, no loss, 100% fully committed, we get out. Very important for me to address these things because people sometimes think we shy off from addressing these things. The third one is the famous government to government. The oil. I think it's very important for us to understand. KCB's market share for OTS was 42% before government to government. 42. We have one of the best trade teams in this country. I don't know whether George is here. This is his time to shine. George Kiluva is not here. We have one of the best trade teams in this country. We have 42% of market share in OTS. The 3 parties that were picked to run that business were our customers before the G2G. Our core business in the G2G is to issue LCs to facilitate the 3 entities within governance. At any point, KCB either has money or fuel. Fuel managed by KPC as collateral manager. The collateral management agreement that is in place ensures that KCB has no exposure. Now the only thing that we have to deal with is obviously access to dollars. And so far, we've managed it, Ben, isn't it? But I also want to point out something, and this is controversial, but I must warn you. When we sought out that solution, it was not one bank. We were 16 banks as were seeking that solution. Very important to clarify. Today, there are how many banks? Ben? Anastasia? 5 banks? 5 banks. So we couldn't say this because it's a reporting period. You hold back. Those who know me, you are itching to say something because you're being punished in that, it's called what? Yeah? Charles, what is that? Twitter, X. Oh, Squeezy is not Twitter, X. I don't know why they picked that name, but it's okay. Right? But I just wanted to point out something as well. So I think, David, by the time we started looking at those numbers, when it appeared headline, we were told we were number 6. But I think it's important to look at shareholder funds versus the market capitalization. And you know there's a fundamental problem. We've consistently increased shareholder funds. Consistently. And I'll come to comparing with others. Because I think somebody was on record to say that they're bigger than the other 3 banks. We've seen we went all the way to 15. David, where are you? Was it 15? Rock bottom. Today was 20.75. We continue to do what we know best. Grow shareholder funds. Grow shareholder value. Market will judge you based on that. Market will come to know that proximity to government is actually for the good of the organization. Market will come to know that you're managing capital correctly. Market will come to know that you are reducing the NPL stock. Market will come to realize you are not the only one on the NPLs. Other people doubled. Live, work, deliver the inputs. Market will respond to it. Can somebody say amen? You see, we are heading to Christmas, so when you are here and you're on your own, right? And look, just see that. She's shareholder funds. We don't name names, but it shows, right? By the time we appeared in the paper, we were number 6, chairman. And I don't know when people started ranking front page, but it's okay. They are my brothers, those ones, right? Give what needs to be done, deliver the right outputs, market will respond to it. There's a lot of perception in this market. And we started getting this beating when it was a reporting period. There's a problem of being highly governed, highly responsible organization. You want to react, but you are tight-lipped. You are complying. So it comes with a price. Yeah. So I'm sure shareholders wanauliza, Paul, mbona ukuongea wakati hiyo? Yeah. I can see a number of shareholders. Thank you for coming. Thank you. Thank you. Thank you. Thank you. Right. Next. And I think we've, just look at that. When we are going down on market capitalization, you can see shareholder value, shareholder funds. I thought I put this out here because we've been gagged enough. I warned you that I'll say a little bit more than I normally say. Let's go to next, please. And I just want to say we are closing our Beyond Banking strategy. We are very well on track. Hence, the end of this year, we are moving, as Chairman said, to 2024, 2026. It is about transforming today together. We're not waiting for tomorrow. And we are anchoring it on our new purpose. If you just proceed to next, please. We are anchoring that on our purpose, which is for people, for better. But I really want you to see the growth of this organization. And I think you just moved. I want to touch on 4 items. Just move to the next, please. Look at the retail business. 96% is private sector. Yet people say your proximity to government. 4% is government. We have, gross loans. And that's the most important thing. We are growing at the right place, Lawrence. Yeah? Not just government securities. Somebody called it easy banking. Or is it lazy banking? There's a lot of story. I don't want to, I know Bernard, you want to correct me, but it's okay. Right? I think we've talked about being in 7 countries. We're number 1 in Kenya. Let me just re-emphasize that. Yeah? By far. I think there's been an aspect of when KCB group delivers reports, it's lost that KCB Kenya is the number 1 bank in Kenya. And we'll come to the numbers. And if that is the number 1 bank in Kenya, which is core to your entire portfolio, then how do you doubt KCB group? Like I said, we've got some of the best resources in town. Some of the best people in town. And I must confess, when I went to reopen Chase Bank, we had 144 staff from KCB Kenya. 144 to reopen Chase Bank. Tell me which other institution can give you that number of resources and capabilities. I've never forgotten that. I reopened Chase Bank, but not as an individual, because of the resources available at KCB. Those resources are what we will use to. A few people will say, Paul, why are you not mentioning, I'm talking about group. Next. Right? I think we've talked about one of our products that is doing absolutely extremely well. Female-led enterprises. 90 billion in loans. 90. 100 billion for MSMEs. And I would say we are the largest bank in mortgage, for sure. For sure. That combination with resources leading them, it's very important. For people, for better. Everything that we do, every individual we touch, we must leave them better. If you go lazy banking, then what happens to the private sector? I don't know about you, but for every country we operate in, there are staff, all our staff who call that home, and that is their country. And they must do good for that country. And we must also do good for every market that we operate in. If we don't play a role to grow it, right? We've talked about school infrastructure. Over 40,000 schools. We're the first to fund clean energy for schools. Partial grant from KCB Foundation. We're the first to sponsor coding in schools. Because 127 years must matter. Next. I know people want to hear numbers. See numbers. But this is what I spoke about. Number 1 bank, trade finance. Do you see the difference in numbers? Bars don't lie. Numbers don't lie. So when we get involved in trade, it's because we have expertise and we know how to manage risks. Even when we get into shaky areas like NTC, we will come out strong because we have the best of the resources. Then we take our lessons. You know, I don't come here as a CEO and say we don't make mistakes or we don't struggle, but we must come out alive and without exposure to the bank. That's my responsibility with the team. Next. I think I've spoken about leading corporate banking solution, the largest corporate banking. I've talked about the G2G. We facilitate LCs to the 3 entities. We know how LCs work. They're under collateral management. Fuel comes in, goes to a collateral manager. You sell, somebody deposits money, takes the fuel. You have money in a KCB account. If not, you should have fuel in collateral manager. That's it. Ingine yote ya kucomplicate mimi, I have no idea. There's obviously the other side, government sourcing, the international separate. We have 3 entities that have been our customers even from the past. In fact, if you ask me what would be the problem for me, is there were more customers than the 3. That's my problem, actually. In the OTS, there were more customers, there were more entities. If I was to speak as a CEO of KCB, that would have been my worry. There were more that were participating. Now I have to support 3. Those 3 must speak. The others must speak from these 3. I hope I've clarified this G2G maneno. We'll answer questions later. And one of the things that has really worked for us, whether it's with the 3 or the other oil marketers, is because of the network, both for NBK and KCB Kenya. We're able to bank their retailers, the outlets. The whole value chain of oil marketers has been an amazing one for NBK and KCB Kenya. That's when your network counts. I think we definitely, we go green, we're strong in ESG. We funded a number of buses, both for NBK and KCB Kenya. I know the electric motorbikes. I saw a few people say, wakati ya mvua inakataa kuenda, hii ndio mambo ya technology. Yeah? You want green, you have to have a process of perfecting what works this side of the world, isn't it? Yeah? So you have to fund, how else would we know that zitakwama kwa El Nino kama tujafund? So zitakuja. We've delivered $300 million climate and MSME finance. We've greened our portfolio by 25%. We want to get to that 25% by 2025. Next. This is a very important one. And interestingly, I'm going to touch on something different. If you look at those numbers, and if you go and check KCB numbers for a while, and I hope, Lawrence, I'm right on this one. Lawrence is not there, but I hope I'm right. David, for a long time, ATMs was on the decline, was negative. This is an interesting scenario. This is the first report we are making that ATMs is up. It's telling you people are moving away from somewhere else to take their money and do whatever they want with their money. So it's an interesting development, this one. Interesting development. But great news, Angela, thank you. Mobile lending up to 64%. And that mobile service, in our view, it just reflects what is happening. And now, again, I'll be controversial as a CEO here. People are choosing not to use mobile. I don't know whether there's no science, there's no scientific research that has been done. I don't know whether they're running from people seeing their records, if you get what I mean for Kenya. So anasema wacha nichukue pesa yangu nifanye what I want to do directly, isn't it? That's a very interesting development. So when I was looking at these results, I was saying, David, so this thing of guys saying they've removed certain numbers is starting to show. I have no data. I'm just saying. I'm interpreting. Angela, I'm not saying. I'm just interpreting. And in India, they say, but at the heart of delivering that number, I want you to see the other side of that slide. Net Promoter Score moved up from 56 to 62. Despite the challenges, George, that we've had, it means we are starting to tick and correct those things. So thanks to the work you're doing, thanks to the work Angela is doing, thanks to Dennis and your team, we're starting to get it right across the group, particularly on digital and service. It's starting to come together. That's what that Net Promoter Score is showing. Doesn't mean you don't have problems, but we are starting to fix the root cause. And that is why the customer effort to serve is also going down. When I took over this job, I say I'm going to anchor my strategy around customer obsession, fixing it for the customer. The customer of now, before I think about the customer of the future. Keep the customer who is there today happy. Make it easier for that customer. And I'm glad the numbers are starting to show. Let's go next. I think we've talked about, digital, right? Let's look at those values. Year-on-year growth of 36% of value transacted on digital channels. I think at the end of the day, 3.3 trillion outside branches. This is where investors normally get me. They say, Paul, but if they're all there, then what are you doing with the branches, the many branches you have? And I say, branches will always stand to be service centers, relationship management centers, absolute face-to-face building. The competency of the person in the branch will change. The branch will not go away. The size of the branch will shrink. The whole branch will not go away. That's my view. So today, if you're going to open a branch and you go and open one like Moy Avenue, then Umerogwa. Because so it would have to be something unique for that setup. Next. I think we've talked about that. 77% growth in value of mobile loans disbursed. Again, around Fuliza, new KCB loans that we've introduced, new mobile lending. So we continue to innovate, and we put in, Angela, 3 or so new products out. Significant products. And you can sense that I'm referring to a number of colleagues. This institution is run on governance, run by, as I said, able colleagues. I just conduct. Being a CEO, unasimama hapa leo ndio wakati yako. Ukitoka hapa watu wengine wanaendelea na kazi. So it's very important to acknowledge the colleagues that are doing that job. So there's a strong collaboration between digital, technology, and shared services to deliver this proposition for our customers. Then business delivers those products. But at the heart of it, and I'll speak later, is about foundation. But I think I forgot foundation. I didn't introduce foundation. Mendy, forgive me. Yeah, I'll try and, Mendy, thank you. Mendy is our MD of foundation. My apologies. And where is the chair of foundation? Oh, Director Ahmed. Thank you. Unajua tunaweza toka hapa alafu ikue vita, you are favoring other functions. I don't. All of us are important. Next. I think I've touched on this, and I just want to save time. If we move on, this will be available for us to reference. We can move. Important for me to touch on these businesses. I talked about bank assurance. This is what I wanted to do. This is Chairman of Kenya. This slide should make you happy. Did we other things? So even as shareholders that are here, even as we took aggressive position on provisions in H1, it's because we want to build a sustainable bank. When you are number one, you must be sustainable. That's the difference between KCB, Kenya, and peers. Sometimes you don't want to go high, low, sana. Then they say you're a systemic risk. So you just have to stay up or ahead. But that's the difference. And I like this slide. Because I must be the first to acknowledge when we're delivering half-year results, it's depressing. When you have people who are working so hard, and then you have to take those aggressive, and the market thinks it's okay. Everybody else looks like okay. Everybody's reporting 9% NPL, 9. hii ya 22 ikawa hujaenda shule. Sasa tunaanza kuja one class, starting to, but we already have done our homework on our stock. That's why I'm confident about KCB Kenya. Next, please. Chairman, I hope you are proud of your team, and we are proud of the board of Kenya and the management team of KCB Kenya. Lawrence will talk about the rest, because this one put me under yeah. 80% growth in customer deposit, 38% growth in customer loans and advances. We had a 119% increase in transactions. KCB near to. I think it is very important to acknowledge that this organization is led by people who are experienced, who have been in KCB for a while, and those who have not been in KCB for a while. Not that we are new. It's important to just acknowledge Jane is here, who has just been promoted to our retail director for KCB Kenya. Jane has been serving as the regional manager for Coast Region. Yeah? Has been in the bank for how long? For 27 years. A round of applause. Asa niko na gani ya retail ya bank ajui. You know, Anastasia taking on KCB Kenya, same number of years. I don't want to say your age, Anastasia, by saying the years of service. But thank you for your service and thank you for what you've done. Georgia came back from Rwanda after serving Rwanda for how long? 10 years to take over the leadership of NBK. So a blend of strong internal resources, a blend with new experienced resources from outside. My pillar one on people. That will help us. Let's move to the next. Kind of wanted to bring this to just say, look, I've talked a lot about Kenya. The reason why I talked about Kenya a lot is because it's come under heavy criticism, particularly on X and Twitter. Yeah. But look at Uganda. Chairman and Edgar, be proud, 63% up. On revenue, right? Tanzania, 56% up. But Cosmos, I'll come to introduce you guys later. I decided to keep you guys on the back first. South Sudan, 41% up. Burundi, with only 5 or so branches, 16% up. Rwanda, even with the integration and the challenges of bringing those two businesses together, 12% up. DRC, you don't see up because it was not in the books Q3 last year, but 18.1 billion on revenues. When you look at non-banking, 29% up. Say KCB Kenya, despite the aggressive provisions, revenue 5% up. Now iko madoadoa hapo, which is why I said NBK 1% down on revenues. But like I said, we're taking a tough decision with George and the board and the group board to do a deep dive. We've done phase 1, phase 2 of it. We're probably. So like I said, by the time I stand maybe one of the podiums, Lawrence, right? Next time, I'll answer that question. Subject to governance and board approvals. So you can see, it's taken us time. The work that we began in 2019 is starting to pay. And it's down to the leadership, both of the board and management of those subsidiaries. So I really want to thank you on behalf of the group board for that level of performance. Thank you so much. Next. I need to move. I'll skip that for your reading. Let's move to the next for the sake of time. We talked about sustainability. It is very important and the core for us, both from an institutional perspective as the entities, the banking entities, but as well as KCB Foundation. Pushing that. It's one thing. We've been in sustainable transport, right? Some of the buses that you see, KCB Nietu is behind it. Those are our customers that are trying to run ahead of time. But we believe it is the opportunities that lie ahead, both in manufacturing, infrastructure. I personally believe there is a lot in agriculture and related value chain. And therefore, that, in the end, and we made a decision, we are going to strengthen that team. We're going to, I haven't seen John Okulo here, but we're going to strengthen John's team to be able to take advantage of this. And we're going to push a little bit more, Mendy, for Foundation to play a bigger role. Sandbox some of these initiatives. See how you can trial for the banks. Try and take the risks, see whether it works, transition to bank. That is going to be our model for some of these things. Next, please. I think I can see people saying, Paul, wapi numbers, Lawrence akuja juu. I really just want to re-emphasize that our foundation, I think you've seen in the papers today about Subsidiary being our pillar for the foundation. But we want to deliver shared value for impact. You know, we delivered our sustainability report for 2022. We highlighted our progress. And we will continue to do a little bit more. I think, if I'm not wrong, David, is that the last slide? Before now I sum it up. Just go ahead. Yeah. I spoke about Subsidiary, 100 greenhouses. I think that was articulated in the paper today. I don't want to belabor it. You know, we've scaled that program to Uganda, Tanzania, Rwanda, and Burundi, reaching 3,100 youths. Almost 25,000 MSMEs. If there is anything that we're going to deal with in these countries that we operate in, is youth employment and empowerment. It's a time bomb. Subsidiary is supposed to enable people to use their hands, brains, heart to be able to earn a decent living. Right? That's the role of Subsidiary, transforming, getting those capabilities out. We've disbursed over 260 million in working capital. It looks a small number, but because it's small denomination of loans, it's to massive number of people. We've created 64,000 jobs, and an indirect 102. I think it's very important that I re-emphasize here, Subsidiary will be our flagship in all the markets that we operate in. Next. I think you must have seen partnership. I spoke about partnerships. In the end, you can't do these things alone. So we've delivered this with GIZ, and we'll continue to do a lot more. These are people who could not raise money. It's testament of transformation. It's what we can do to transform people's lives. For people, for better. Next. Yeah, we've talked about Mifugo ni Mali for the foundation. Because I think many instances, some people stand on the floor and it looks like they're the only ones who are doing transformative things. 14 Asal counties under Mifugo ni Mali. We've disbursed over 103 million, almost 76,000 jobs raised. I think when things were bad during drought, and I'm a member of the drought steering committee, 150 million from KCB. That you can wish KCB away, but transforming 10,000 households, 150 million. When life was being lost, KCB near to. And that KCB Nietu did not just pop up from nowhere. Rosalind and team went and interviewed people across the markets we operate in, and they said, this is what we know about KCB. Whenever we are there, we know KCB is there for us. I'll skip that just to give Lawrence. I think Lawrence is itching to come up. We've received a number of awards reflecting the standards that we have, leading financial institutions, in terms of comparative. I do not want to declare, David, what you're about to win. It will come. It just says that we are a strong institution. Am I running to one more? Next, please. Yeah. I put this slide because sometimes many institutions closed the sports. They decided they're not going to support. One institution that has stuck with sports and transformed lives in sports is KCB. So I don't know who you know, but the best rugby team this side of Sahara is KCB Rugby. I don't miss it. Wewe kama unajua Sugarunguru, which is Kabras, I don't know, but I know, right? But one amazing thing is the ladies volleyball team is doing amazing. Won the league, won the Africa Championship, isn't it? Right? 6 players in the international team. 6 players in the international team. Sasa zingine ukiona tunarukaruka kwa batu tukishangilia volleyball, it's because they are our players. So please don't get us wrong that we are mad. No, we're just celebrating our own players. Right? When you see us in the rugby and people say, Paul, umeanza kuenda rugby. No, it's because our players are in the international team. Right? Feel the roar. World Rugby Championship. In Kenya, on record, because of KCB. KCB gave the guarantee, the bank guarantee, for the first bidding for WRC to come back. So when you see us shouting in Naivasha, it is because we brought it, and it is the joy of being part of KCB, bringing WRC to Kenya. Gives us returns for the country. It is, I think, one of the most watched globally. Job. And that gentleman is our customer experience director or customer experience doctor, but he's also a rally driver. Give him a round of applause. And he competes. So Job, we don't bring it for you. No, we just make sure that you enjoy it. Thank you, Job. He's also called Njuruncheke. Right? We've invested over 1.2 billion. And we've made a commitment. We'll bring WRC. Now I'm told, Rosalind, it is during Easter. So we're getting closer to what it was before. So that even kids can get a chance to be able to participate and not be in school. So it will improve over time. Sometimes I hear, money might have been lost. Do you stop a long course or you put in controls and governance going forward? So we believe in those. Yours truly was the chairman of KCB Football Club for a while. I think it's number 3 now or number 4, somewhere there. Itakuja too. Yeah? I think our chess team has been number 1 for a while. And we are concluding the East African Golf Tour on 15th. But look at rugby. 6 players in the 7th national team. 5 players in the 15th national team. KCB Nietu. I love you wonder why people say that. So I'll stop there. But as I step off, you might say that Paul is the one who runs the organization on his own. I really want to say I don't. I just lead a team of brilliant guys. So Lawrence will come in next, is the group finance director. Anastasia Kimtai is the managing director for Kenya. Boni Okumu, the group general counsel. Javed Achola. You have another name, right? The group HR director. Charles Langat, who is our group internal audit director. John Mukulu, the one and only chief risk officer. Cosmas Kimario. Cosmas is MD KCB Tanzania, Acting Group Regional Business Director, actually appointed only pending CBK approval. He's been approved by Bank of Tanzania to take over that role. A new kid in the block on the other side, I can see Dennis Olemi. Dennis is our group CTO. Dennis, I think it feels like you've come a year ago, but it's just a few weeks, is it? Yeah, welcome. Who have I not introduced in the group? Does anyone have? Yeah. Oh, Rosalind is in the house. Rosalind, Marketing and Communications Director. Our Group Shared Services Director, Acting. Jacqueline. You know, when you're sitting near the chairman, it's very difficult to see you. You can think you're bodyguards for the chairman. Anyone I might have left in? Yeah, we've got a Kenya team, a few members of the Kenya team. My apologies, time will not allow me. But thank you very much for what you've been waiting for. Lawrence is here to deliver the numbers, and then we'll appear for questions. Thank you very much, and looking forward to interacting with you later. Lawrence, over to you.
Thank you. Thank you very much, Group CEO. I shall deliver the numbers. So to start with, let me start with the balance sheet. Not too long ago, we were here celebrating KCB crossing the 1 trillion mark. I'm glad to present that as at Q3 this year, we have surpassed the 2 trillion mark of the balance sheet. I was about to say tunahitaji makofi, but it looks like you guys are well-oiled. You know, that has been driven by all aspects of the balance sheet. As you can see, deposits have grown by 80%. And that 80% has brought deposits to about 1.7 trillion. The deposits have been deployed or invested in loans. Again, another first. Our net loans as a group have crossed the 1 trillion mark. So, asante. And you can see we've also increased our investment very tactically in government securities, 34% increase. And in short-term funds placements. The major driver of that 291 growth in short-term funds placement is our new acquisition TMB, which they usually have quite excess liquidity, and they do invest it in placements right across the universe in various institutions that qualify and within the compliance requirements of DRC. So quite a good performance on the top of the balance sheet overall in terms of assets. Let me just break it down a bit for you. That growth has come from all our subsidiaries, pretty much all the subsidiaries. Before, when I used to stand here, it was sort of one-sided, talking about the growth coming out of particularly the big subsidiary Kenya. But if you look at the year-on-year change on that slide, you'll see the year-on-year change in terms of most of our international subsidiaries. KCB Tanzania at 48, KCB Uganda at 70%. GCO forgot to mention that I actually sit in the board of KCB Uganda, so I'll take the accolades. But well done to Constant, Edgar, and the team. South Sudan 21. TMB wasn't there in last year in terms of change, but it has had a significant contribution, about 280 billion of worth of balance sheet. Burundi. So you can see high double-digit performance. KCB Bank Kenya 50%, and a lot of that growth has come from what Paul was talking to earlier in terms of our partnership. Our partnership with government, our partnership with other institutions has really propelled that growth. Subsidiaries now contribute a third of the total balance sheet of KCB Group, up from a quarter same period last year. If I strip out, just focusing on the subsidiaries the international subsidiaries, so knocking out non-banking and knocking out NBK, which is in Kenya, you can see those collectively, both organically and inorganically, have grown by 3x, close to 3x, from 203 billion in balance sheets to 548 billion. So the investments we've done, whether it's going to acquire banks or is focusing on our already existing subsidiaries to ensure that they grow, is definitely bearing fruits. 32% growth year on year organically, and when you add TMB, it gets to about 270. My monitor has gone off here. NPL, I think Paul has done justice in talking about NPL, but I'll just continue with what he started. So the ratio itself is coming down. Yeah, if you look at year on year from half year 2022, we were at 21.5% as a group. That has come down to 16.4. So as a ratio, trending in the right direction. When you look at our peer comparators, it's going in the other direction. Industry, this represents just industry for Kenya because of the timing of publication of a lot of from the other regulators. It's usually difficult to get what you'd call industry for the regions, for the entire region. But for Kenya specifically, again, also that is going up, and you can tell the impact of shrinking disposable incomes from households. The impact of that does show in a lot of our business by way of NPL. Whilst that NPL is coming down, as management, we still feel it's not coming down fast enough. And I said this is a ratio, because the ratio is a function of your actual non-performing stock as a percentage of your total loans. So if you're growing your total loans, the ratio will come down. It's important, to focus on the actual stock of NPL. So when we look at the stock, 187 billion of the 2 trillion balance sheet that I talked about is non-performing. It's basically not earning us much. It's actually not earning us anything. We have looked at, we can explain in terms of that waterfall, 10 billion was contributed by consolidation of TMB into our financials. 20 billion is as a result of translation of the FX. Quarter 3 2022, the Kenya shilling was around 108. We are translating it at about 150 now. So that simple translation contributes to about 20 billion. But we still have downgrades. We have downgraded about 44 billion of our book. The credit and business teams have done a good job of the recoveries and writing off where we believe there's no need to spend more time in chasing. But we don't just write off and forget about it. We write off and put it in a special unit where we have a team that goes to chase it. So that 187 for us is the focus. We want to get that number lower. So whilst the ratio is coming down, we want that number of 187 to also trend in the right direction. In terms of just how that NPL is distributed, the good news is we've always said corporate, especially in the Kenya business, is the largest contributor. It still is the largest contributor, 28.4. But you can see, at the top there, when you look at the various, Q3 last year, full year, and Q3 this year, the trajectory is going in the right direction. And for corporate, I must say, is not so driven so much by increase in loans. It is actually remediation of the facilities. So I think that definitely is a good story. You can see NBK, KCB Kenya also contributing to the reduction in the ratio. But as I said, our focus is really on the stock. We have done a lot of work in terms of provisioning, increasing our provisioning, looking at our collaterals. So the good news is, that non-performing stock is more than 100% covered by both the collateral and the provisions that we apply on it. You'll notice that the regulatory coverage is slightly lower than the IFRS, the accounting one. And that's because the regulator, depending on the length of time an account has been NPL, the regulator does ask us to discount the value of the collateral. So if you own a house that is valued at 10 million shillings and you've been an NPL for over a year, that we take 20% off of the value of that building. Not because in the market the value has gone down, but that is just the prudence the regulator does ask us to operate, and that's why you see that coverage ratio is slightly lower. The work also that we are doing in terms of remediation of NPL is paying off from a capital point of view. You'll see, the 9 months to 2022, what we call the SLLR. That I have to say it slowly from where I come from. Otherwise, you'll wonder what I'm talking about. It stands for Statutory Loan Loss Reserve, and that's basically the difference between your prudential or regulatory provisioning versus your accounting provisioning, which is IFRS. You can see the first 9 months of 2022, it really shot up. It was a massive increase, which had an impact on the core capital. This first 9 months of 2023, because of the work being done in terms of remediation, that is starting to come down and is releasing capital back into the business to fund the growth. Speaking of capital, at a consolidated level, at group, we do have good buffers. At core capital, a buffer of 400 basis points, and at total capital about 330 basis points. We specifically wanted to show Kenya because Kenya has come under pressure in terms of capital, whilst we have not breached any regulatory requirements. The headroom in terms of capital is a bit thin. One thing I'll point out is we are only allowed to apply 50% of the profit after tax for computing these numbers. Soon as we get the full year financials audited, we then utilize the other 50%. For Kenya, it will be something close to about 17-18 billion that will come in terms of capital for computation. That will raise from our forecast, that will raise the headroom to more comfortable regions. So wanted to assure that, whilst we are showing thin capital headroom, we still have a back pocket of the 50%, which has already been earned, just waiting audit as per the regulatory requirements. This slide shows KCB's, again, just touching on KCB, still on KCB Kenya because of the capital. You can see last year, the core capital kept on coming down, and that was mostly driven by the dividends that we KCB Kenya declared to group, most of it which was used for acquisition of TNB. You can see the turnaround, the hockey stick in 2023, from starting at a low of 92 billion in quarter one, we at about 101 at the end of this quarter. Again, the ability of KCB Kenya to generate organic capital is phenomenal. I must say, KCB can generate a lot of capital. We expect, with a forecast, to close the year with about 200 basis points headroom at core capital, which will be about 10.5 plus 2, so that's about 12.5. We expect 2024 to close at double that in terms of headroom, another 400 basis points, and that will continue growing into 2025. So whilst we understand the concerns about capital, it is something that both the board and the management are very keen. We've got a very keen eye on it. The last thing, being a systemic bank, is to breach regulatory capital requirements. This slide just sort of explains that even when our capital buffers have been thin, it has not affected growth. If you look at quarter 3 2023, the risk-weighted assets value at that time was 938 billion. With the capital, the core capital that we have as at the close of quarter 3 2023, we could have gone up to 964 billion shillings in terms of risk-weighted assets. So it has not constrained growth. We have been cautious, and we've been picky also as part of our NPL asset quality pillar of our strategy, being choosy about what sort of assets we do right. So I know there are stories. Sorry, I've gone. Just take it back a bit. I know there've been stories out there that KCB is not lending. KCB is constrained on liquidity, is constrained on capital. But that was basically just to show that we still do have headroom in terms of what we can absorb from our risk-weighted assets. But we are prudent about how we go about it. Coming to deposits, I talked earlier on. Really good growth in deposits to 1.7 trillion. Mostly driven by organic growth, and the bulk of that actually coming out of KCB Kenya, but also the consolidation of TNB has helped. You can see the mix of deposit has changed somewhat. If you look at Q3 2022, 2/3 of our deposits was coming out of demand. Demand is really what is not very expensive deposits. This year, same period this year, that has gone down to 60, and it's because the growth has come out of savings, and the savings part of the deposit does attract a fee. But nonetheless, that deposit, as I showed earlier on, has been deployed profitably to the various asset classes that we interact with. Coming to performance in terms of our margins, our margins have declined somewhat. We've come down from 7% last year to 6.3%, and the major driver of that decline is coming out of cost, cost of funds. You can see, and this is cutting across the region, not just Kenya. You can see, the costs. The interest rate for investing in 91-day treasury bill, as at September, it was fetching 14.5%. So anybody who's coming to give you a deposit, or you're going to look for a deposit, the first question they ask you is minimum. Can I get 14.5? Because that is risk-free. If I'm putting money with your bank, you're not risk-free. People choose when to associate us with government. When it comes to looking for interest rates, they say you're not risk-free. Other times they say you're government. But that is driving the cost of of funds. You can see the growth from December, which was 9.4. The other markets, Burundi 3.5 to 5.5, Rwanda at 8.2, Tanzania at 6. So it's really cutting across. With the exception of Uganda, the cost of the interest rates have gone up. And as a result, the cost we are paying for those deposits has also gone up, and that has contributed to that decline in what we call our net interest margins. I'm getting close to what you're waiting for. So, total income, Q3, 117.3 billion, 27% increase. And that has been driven by interest income, from loans and from government securities. You saw the growth in loans earlier on. NFI, which is non-funded, our fees, franchise, especially other fees and commissions coming across from Kenya, from consolidation of TMB and the transactions that Paul had shown earlier in terms of our digital transactions. We did talk earlier on about our trade finance. That book has more than tripled to be the largest in the country at 477 billion. We have not been spared from the cost side, which I talked to earlier. You can see the interest expense from deposits up 56%. In the interest expense from deposit and placements, and in there is actually what we borrow from our dollar foreign currency denominated borrowings from various DFIs. We borrow on a base of either LIBOR. Some institutions still use LIBOR or SOFR, and that has gone up. A year and a half ago, 6 months LIBOR was about 0.5%. It is now about 5%. So that pushes and then of course the person who's lending to you adds a margin on top of that. So that has contributed to the increase in expenses, and the service fees, which I talked to earlier. You can see 119% growth coming out of service fee. All the work that has been done in terms from a digital point, especially in the Kenya business, is paying off, and the consolidation of TMB has also contributed quite significantly in that. So 117.3 billion. Keep that at the back of your mind. I want to see those who will compute what the PBT will be after I show you the costs. Year-on-year costs have gone up 46%, and I would want to say that this is one of the reasons why we could not buy the chairman high-quality paper. We had run out of money. But the 46% is really just the headline. It's important to put that into perspective. We have had a number of one-offs. So if we strip out the one-offs, you can see that big red 16.8 billion there. The actual like-for-like comparison year-on-year is a 6% growth. Those one-offs are made up of the largest one is incorporation of TMB into the financials. They were not there in 2022. They are there now. It's almost about 13 billion. I'm sure you all read newspapers. You know that we had a court ruling against one of our subsidiaries, NBK, and that did come with quite a punitive amount that we paid. And then also we did run voluntary early retirement scheme, both in KCB Kenya and in NBK. That has about $1 billion and something of costs that are in 2023, but were not in 2022. So when you strip out those one-offs, you look at a below inflation growth in expenses. So I wanted to clarify that. So remember the 117.3? How many of you can remember what the cost was? 60, yes. There are guys who are awake. But it's the auditor. Him is always awake. Now coming to the other part of costs, which is our loan loss provision. Massive increase to close at 15.8 billion in terms of loan loss provisions year on year. Main driver coming out of this one is the FX impact of our foreign currency denominated facilities. As the shilling continues to slide, there's a translation element that you've got to build into when you translate into our reporting currency, which is Kenya shillings, and your underlying collateral is sort of remaining at the same value. So that has had a big impact there. But also, you remember in the NPL slide, I did show 44 billion worth of downgrades. So to cover, to ensure that coverage ratio is at the right level for those, we also did take additional provision to get us to about 16 billion. If we look at our profitability just before you get to provisions, as a group, we actually recorded a 12% year-on-year growth to 56 billion. The earnings per share has gone to 12.7. I tried to avoid talking about that because that will preempt a question that will come later. But I'll hand it over to the CEO to answer when it comes. We have had a very, very good quarter three. I think I just wanted to highlight that on this slide. It's been a record performance quarter. Delivering 14.6 billion in earnings in one quarter is quite an extraordinary performance, especially when you look at where we've come from in Q1, which was just under 10, and in Q2, which was 6.3. Granted, that 6.3 has the impact of the NBK ruling, but even if you add that into the figure, you still have quite a significant growth. So those of you who are doing the mathematics and you've applied your 30% tax, you'll now come up with what our profit after tax for the quarter is. We have delivered 30.7 billion in profit after tax, which is flat, marginally higher than same period last year. I must say, if you look at how we did in H1 or quarter two, comparing same period to same period, our PAT, profit after tax, in half year was 16% below the previous year. And that's why I'm talking about this quarter being quite phenomenal in terms of performance, focusing on our strategy and execution of our strategy, and just having all hands on deck to deliver that performance. Again, that has not come out of just one business. It has come out from across the board. And our shareholders who are here, I saw Chami. Yeah, thank you, Chami, for coming. Thank you. Thank you. They do ask us many times, why do you take capital out of Kenya and take it to other parts of the region, where Kenya still has headroom for growth and delivers good ROE? I think this slide should answer that question. Portfolio risk management, because putting all your eggs in one basket will come to bite you. And you can see the performance from where we have invested. Look at the performance in terms of earnings delivered by KCB Tanzania, 157 year-on-year growth. 22 from BPR, after consolidation with all the issues of merger, still delivering, very reasonable growth. When I look across there, it's really, a good performance from our subsidiaries, especially the ones outside of Kenya. So just ensuring that you're managing your risk, investing. I know, Chami, you don't just own KCB share, because I see you in many other AGMs. That is portfolio management, risk management, isn't it? So the contribution, net earnings contribution from other subsidiaries has grown to 33% this quarter. And that the growth that has come out of those other subsidiaries has more than offset the loss that at NBK. Basically telling you that when one is down, others will be up, and you should be able to balance your portfolio. This sort of talks to the same conversation I had. This basically just strips out NBK and shows the 3x performance in terms of earnings by the other subsidiaries. So I'll just rush through that. KCB Kenya has not been left in terms of earnings. Quarter-on-quarter performance, you can see a 33% growth from quarter 2. 7.5 billion in terms of net earnings, and quarter 3 delivered a good 10 billion in terms of earnings. So whilst the other subsidiaries have delivered higher, not to say that KCB Bank Kenya has been left behind. I think this talks to the fundamentals of the business. The fundamentals of the business are sound and they're delivering. We have issues in terms of dealing with the loan loss provisions. We know what the issues are. We are dealing with them. But when you're growing your top line, that is the right source of growth. I've always said you can never cost cut yourself to prosperity. Cost management is important, but in itself is not a sustainable strategy. You've got to make sure you're growing your top line, your revenues, and that's what KCB Bank has done. I'm getting close to the end. This basically just also talks to the investment, the return on investment from all our subsidiaries. You can see the return on investment in quarter 3, 2022. That's a bold bar graph, and then quarter 3, 2023 is a light blue, sky blue above. Very, very good high digit delivery in terms of ROE, with the exception of NBK, which we've talked about, and the boss has promised the next time he's standing here, he shall deliver a keynote on that. The rest have fantastic performance in terms of ROE. Closing at about 20% at group level, and that has grown from about 16 in the last quarter's performance, H1 2023. So allow me to just touch on the outlook before I sit down and maybe we'll take questions. You'll remember we had revised our guidance. I think that was it quarter 2? Yeah, quarter 2, David. And gave outlook that we thought were in line with the environment we're operating in. The good news is we are tracking very well on those key the KPIs on that revised outlook, with the exception of the net interest margins, which is on the red at 6.3. I did talk to the reasons behind that. Asset yield. There's an element there that is being caused by our mix, our loan book mix. We've got a bit more coming out of foreign currency denominated loans, both in Kenya and in Uganda. That book has grown significantly. When you lend in foreign currency, you will not lend at 15%. You will lend at a hard currency, lending, or interest rates are usually slightly lower. And that has dragged down our number slightly. But good news is that we have more greens here than we have reds compared to where we've come from. So allow me to stop there, ladies and gentlemen. Thank you very much.
Thank you, Lawrence. You should have remained behind. So we'll now go through our Q&A. And I think we also have some questions online. So in case of any questions online, please send them to me so that I can be able. Have you shared the mic, please? Yeah. So first question.
Thank you very much for the opportunity. My name is Catherine Emali. I'm a shareholder. As I stand here this evening, I wish to register that my mind has been born again. Being born again means what? We have had the last 2 months troubled minds and not even being able to sleep because of the share price each day. And as we know, KCB is one of the strong counters in the Nairobi Securities Exchange. So our worry was, what is happening? What is the rumor? And we keep ringing each other to get the news. So come the time for our AGM, the group CEO, I know you'll give me a good message as you have promised. Thank you very much. My next sentiment is on going forward. What is your focus on the asset management? Because we see in the unit trust, the insurance companies are doing very well, and they even advertise in the newspaper, competing on their net earnings as the interest rate. Give an example, Sanlam, CIC, and IC Alliance. So, can you do something to market yourself and you make wealth for us from the asset management unit trust? The third one, I want to be very fast. Service delivery should provide some kind of uniformity. I am a KCB customer and a shareholder. When I deposit money for my clients in NBK, I get a message, Catherine, you have sent money to so and so of this account number. And immediately when I ring my client, the client tells me, yes, I've received a message. You have deposited 100,000. Oh, sorry, you have deposited some money. But when I go to KCB, that informity is not there. I deposit, it's only Safaricom who talks to me. You have sent so much to such account. But no message is sent to me to show that I have sent money to so and so. So can we have that kind of uniformity in the moving forward in the future? The last one is on cash deposits also. When you deposit money at KCB, I am in the branch of, this is near Marshall's, behind the Vice President's office. I'm sent to somebody behind the counter, is it behind or near the security people, to deposit money there. And after depositing, I'm given a slip like that one of the supermarket. And it gives an agent number, M-Pesa agent number, with the name of our company. Why don't we just have the transaction as KCB? If we need to buy that Kaduda, let the Kaduda talk of KCB, cash receipt this. Not M-Pesa agent number this. So am I dealing with an agent? And in fact, it has an agent name in Kayole. And that time I'm transacting at KCB Bank. How can it be reading Kayole? I'm sorry for that. Thank you very much. Those are the remarks I had.
Thank you, Mama Catherine, for your questions. So I think we'll take those three. We have somebody else? Okay, please ask. Where's the mic? Give us your name.
Thank you, Mr. Chairman, and everybody else. My name is Esther Otieno. My question, in the presentations on provisions for the non-performing loans, the finance director had talked about 100% provision, which is both for collateral and for the provision and the collateral. So I don't know if that provision is for each of them is 100 or both of them is 100%. So my question on that is, what effect has IFRS 9 had what effect has IFRS 9 had on the bottom line of the group? Question number 2. Have you had instances where you've entered into projects which have reduced the net present value of the group? Question number 3.
You have another one?
Yes.
Okay.
As the CEO was talking, was giving us the presentation, he talked of deliverables. The deliverables which will take place. But he did not tell us how the implementation of the deliverables will be. I understand this must be re-engineering, because in the last year's results, you did not do very well. Question number 4 is on managing risks. He also talked that KCB manages risks very well. And in the presentation of the finance director, he talked that the foreign exchange risk, you gave a provision of 118%. My question is, what type of exposure are you exposed to? How do you measure, manage, and mitigate the risks? I was at another presentation the other time. It was for a bank, and they said that they are number 1 in asset base. And now we come here, KCB is also saying we are number 1 in asset base. Thank you.
Okay, thank you, Esther. I think now we'll answer the questions. Those are enough. There are about 8. So I think the other question which was asked by Catherine was about the share price. So I don't know that that will be taken by Chairman or Paul. Okay, Chairman. The other question on service delivery.
Yeah.
Okay, Paul.
No, thank you. Thank you, Judith. Thank you, Catherine. And great to see you. I can see a number of shareholders. Karibu nifikiri ni AGM. But thank you, thank you. Thank you for coming. Always thank you for your support. I think in terms of, I've talked about a number of reasons around why the share price is in the way it is. And at the end of the day, it's the inputs that we give that is going to determine the share price going up. We've gone, as I said, to 14. We are up to 20.7, the last at 20.7. And I'm confident that this team and the board will do the right things to get back to where it used to be. I think it's also, there's something I forgot to say, and for my team, they know when I have the mic, the things I will say, maybe they're not prepared for me to say, but I'll say. It's also good to note that when you look at the profile of shareholders for the different institutions, a number of those shareholders for those other institutions are either parent corporates or individuals who are involved in it, Maurice, right? They're not selling. It's very important. They're not selling. So sometimes they ask, why is it just the greens that are reflecting that direction? You know what I mean by the greens? Yeah, it's just because of the diversity and the base of those shareholders. I think that's one item that I didn't say. But at the end of the day, and thank you for acknowledging that, we've tried to explain why that has happened. You've seen, and that's why I chose to go into that level of detail, because we've not been able to explain to you because it was a reporting period. And we are not allowed to comment in that period, before we release the results. So that's why I've gone into this level of details, so that, people understand. I think on asset management, you're right. And interestingly, asset management, the chairman is here. They had their strategy meeting for 2024 yesterday. The first thing we should agree with you is you're right. They spoke about presence and visibility yesterday. And I'm glad the chairman and the MD are here. Wamesikia kutoka kwako kama shareholder. You have very good product. My word to them ni kwamba unawasha taa, alafu unaweka chini ya meza. Hata Biblia imekataa hiyo. You've got to get out. So we have a strategy for 2024. They are starting to implement. So Victor yuko hapa. That is his responsibility. Victor unajua shareholder akisema shareholder amekupatia feedback. But it truly aligns with what we discussed yesterday. It was yesterday, right? It was yesterday. So thank you for your feedback. We're doing something about it. There's a gentleman I mentioned called Dennis. He's there. Dennis Volemi joined us with one objective, is to digitize our existing processes, digitize the entire customer journey for our existing customers and start thinking about what is the bank of the future. Huyo jamaa yuko hapo. Leo amevaa tai. But you know what, waitia wavangi tai. But I'm grateful that that Dennis has joined. Because what we've seen in the period that Dennis has been with us, and it's been a few weeks. Sometimes we wait for people to go to the grave, then we go and say good things about them. That team, we've had an amazing team from IT. We said we need a leader. So we went through a whole process with the board. We brought him on board. Akituangusha, tutamleta tu kwa hii kiwanja tena tutamsema. But so far so good, and we assure you that we will fix those items. The other thing that we want to, even as we make a decision, as the board goes through the evaluation on NBK, is we're actually at the final leg of deploying the core banking system that KCB has to NBK. So by the time we get to January, worst case scenario, George, is it mid-February? Worst case scenario, a KCB customer will be served in an NBK branch, and an NBK customer will be served in a KCB branch. Worst case scenario. That opens 80 branches for KCB customers additional as we start, and another 200 plus. That whole process should bring best practice. So you're right on service delivery. We will fix it, and that's why we brought subject matter experts. There's also Angela. I think Angela is sitting quietly there, who is Digital Financial Services Director. A combination of Angela and Dennis will have to deliver better value for us. And that includes the question on cash deposits, right? You should get sufficient notification. If I put myself on the back of the customer obsession issue, the most stressful time is when you run a transaction and the message to confirm, ichelewe kidogo. Because you don't know whether it's going to the wrong person. That period, if it just delays kidogo. So we have to fix that, and we've taken your feedback and we acknowledge it. I think, Lawrence, you'll tackle the NPL because Esther is referring to your comments. And kila mtu na mizigo yake bwana.
Thank you. Thank you. Esther, thank you for your questions. Let me start with the coverage ratio. So the 100 plus that you saw in the slide is everything. It's a combination of provisions and collateral. The slide actually did show the split. I think when David, you load up the slides onto our website, it'll be clear. You asked what the effect of IFRS 9 in our P&L has been, and I'll answer that question broadly. I'll say a lot of people look at IFRS 9 as mostly net, loan loss provisioning tool. It's more than that. It's actually a tool that, one, yes, it does, you use it for, computing your expected credit loss. It's a complex model. You put a lot of parameters in it. But more importantly, it's also a tool you use for managing your credit, your asset quality. You get a lot of information that comes out of that tool that helps our credit risk team in terms of scoring, in terms of, helps us in terms of pricing. You look at which are your riskier accounts and what amount of premium do you apply to those accounts from a pricing point of view. So it's a more holistic tool. It is, as accountants like making things complicated so that we are relevant. it is a very complicated standard, to be honest. You ask anybody across, they will tell you it's complicated, but it does bring value. You asked about the FX risk. The 118% was really the year-on-year growth in terms of loan loss provisions. In there, one of the drivers for that increase is the slide in the Kenya shilling. So whenever your reporting currency is different from the currency that you have done some part of your business in, you will always have an exposure from a risk point of view. So that is, in this case, that has happened, and it has impacted part of our loan loss provisions, or what we call ECL or provisions. And then your last comment, it wasn't a question, it was about where you are recently, having breakfast in another session, and there were statements made. What I would say is our financials will be in the newspaper tomorrow. They'll be published tomorrow. You can compare who was saying the truth. Thank you. Sorry, there was one question about NPV, and you asked about whether we've ever invested in a project that the NPV did not pan out. I'll say yes. And one that comes to mind, sorry, George, is really in NBK. We had a clear business case when we invested in NBK. It hasn't delivered what we had set out to do, and we'll own up that yes, it does dilute the overall NPV for the group.
I think just as we hand the mics to the rest, Chairman, just as you come to make a comment, I think it was the whole question around how we manage risks. That gentleman, I think first we have a robust risk management framework, policies. But John, sitting here is our group chief risk officer. If you look at the governance framework for us, risk and audit, and you can see they've sat together. Yeah, they consider, and they are independent functions. They report to the risk audit committee and into the board. So both John and Charles are independent, they run independent functions, and that's a reflection across all our subsidiaries. It's very important that those two functions, while they report to me day to day from operations perspective, but they're truly accountable to the group board, audit, and risk committee. That's how we manage our risks. Chairman.
Thank you very much. Thank you very much. I don't want to answer on a specific question, but only to appreciate the issue that was raised and which has been answered by my team on service delivery, and the issue the lady mentioned about going to deposit her, cash, and the whole question of service delivery is something we are taking very seriously, and this is why what the CEO has explained in terms of the action taking. As a board, we have made it very clear to our management, we cannot be the bank of choice if our customers may not be getting the kind of service delivery. So we want to assure you, because we believe in you, and we want to ensure that you get a quality service, that those issues are addressed, and as part of this that has been mentioned, it is part of what our management is to be executing. Thank you. I just wanted to give you that confidence.
Thank you, Chairman. I have a question from an online viewer. So I think this one goes to you, Lawrence. Owing to the thin capital headroom, have you received Tier 2 funding in order to shore up your capital ratios? If not, when do you expect it to come through? So anyone else with a question so that you can take 3 more? Yes. Yes, Chami, go ahead. Yes, go ahead, Chami.
Group Chairman, let me say that we are welcoming you warmly today for the first time. We may have some clap for you. Clap for our Group Chairman. What I know, I've been your friend for a long time, especially when you are in Treasury before you went to higher office where you did very well. From there now here, you'll do very well. You'll assist the whole of this, your group here. Number one here is our group CEO. He's leading a very good team, and he's capable. Our group CEO has been with me for a long time, and I know I was asking him questions in AGM, not this Q3. Q3 I expected the press, not ourselves, to be asking questions. But anyway, feedback are not bad. Now, group chairman, when I see the bank going high, it's a success for you and success for us, and success for your team. And in fact, I appreciate and I support, and I've been supporting. And you know, I think you know, you are with me in the boards before you were in the boards. And you saw how we are contributing during AGMs. But we are friendly. There was no enmity between us. But we are contributing because of the customers, shareholders, investors, and all other stakeholders. So I know, as you see three, there are three, as you are three, this bank will go higher and higher. KCB, for people and for better. You clap for that, my friends. What I know, group chairman, is that you have a very good team here, both subsidiaries. And what you have done well, group CEO, to bring all subsidiary representatives to this place today for introduction. And that is commendable on your side. You know, when you do that, and they see us, they look at us, they see us talking as shareholders, we support them. When they come from here, they will work very well in their places. South Sudan, I think there is no war now. It is now a good place. Rwanda, there's no war. They are only fighting in Goma for minerals. Uganda, it's okay. I've been there attending a IGM for a bank, and we were there up to 1 o'clock for cocktail party. Today, I think you'll host a sport cocktail party after this meeting. So now, my comment is that, but let me comment on, number one in this bank should be Paul Russo. Number 2 should be David Madeka. Number 3 should be Judith. Number 4 should be Roslyn. These are the people I've marked, and they're doing well. They are social, and they are, in fact, they are in contact with the shareholders. Those are the names I have given you. If you want to raise them salary, if you have to do what?
Thank you, Chami. I think we need...
Now, the question is...
Okay.
Question is, those comments are now finished. The question is, now, group chairman, we have now floods, taking out the lives, properties, and at the moment, this is a general question. We have so many bad things in Kenya. We have bad economy also, but I know it is going to go up. But at the moment, there's an economy which is down. And also, we have some other things which are not good. So, how are they affecting our group KCB, and our subsidiaries? And I know our subsidiary representatives are here. One will come up and say their place is good, or it is that way and that way. That's why we meet and we talk, and we like to hear everybody talking. This is just general, because the work you have done is good. I don't want to go into those numbers. That one is excellent. It's only now general that what is going to affect us, the KCB group and the subsidiaries. Thank you very much. Thank you very much for taking a lot of time. Thank you.
Thank you, Chami. So let's give the mic now to one of the analysts. So kindly ask the question.
Yeah, thank you very much. Good evening. Thank you for the presentation earlier. Just a couple of questions to Paul and Lawrence. The first one is, there's no mention of an interim dividend. Well aware of the tight capital position, but you're looking poised to report you know, when you annualize your Q3 PBT, it looks quite robust. So maybe just thoughts around that. Number two is on your liquidity position. It seems to be very strong relative to peers. Almost as if you've sucked all the liquidity towards KCB, jokingly. But it seems to be a drag on your net interest margin. So again, Lawrence, we had this conversation at half year. How best can you widen that net interest margin? And then just lastly, as Paul mentioned, you're cognizant of the tough operating environment. How are you looking to implement risk-based pricing in such an environment? Thank you.
Thank you. I think we'll take those 4 questions. Okay. Have you given him the mic, please?
Good evening. Shadrach from Kingdom Securities. My question specifically goes to on the NPLs. What is the contribution of the different lines of credit to the NPL, like manufacturing, construction, and the rest? And then, which line of credit among those contributed to the first decline in the NPL from 21.5 to 16.4? Thank you.
One more. Okay. Yes, go ahead. One question?
What question?
Yes.
Yes. Thank you, Chair. Thank you, Chair. My name is Sally Chepkorir. I want to say this. We are cognizant and alive to the fact that incredible leadership is the bedrock of every success. I want to take this opportunity to welcome the chairman and to welcome his expertise, experience, and education to this institution. I want to say that we are going to give you our unwavering support so that we can scale this company to greater heights. You are restricting me to one question.
Ask what you have. Ask what you have.
Yes, I will. I'm asking a general question, and this goes directly to Chairman. Kenya is indebted to the financial and technical support that the World Bank and the IMF continue to extend to this nation. We are grateful to these institutions for giving us the 1.8 trillion and 687 billion. My question is, will this money be sufficient to build our economy and buffers? Number 2, will this money tame inflation and debt vulnerability? Will this money withstand the shocks and advance our long-term robust and inclusive growth? The second question is, what effort have you made to mitigate the effects of El Nino that is causing a lot of havoc in some parts of our country? Thank you so much.
Thank you. I think now we can take those. Okay, let's start with you, Lawrence.
Yeah. So thank you for the online question on capital. The answer is no, we haven't yet raised our tier 2 capital. We expect that to be in place by Q1 of next year. So that was that. Let me sort of answer some of the questions that came from Timothy. Timothy, the absence of an interim dividend slide should answer your question. Usually it will be there. So for now, we are not looking at an interim dividend. Liquidity sounded more like a comment and not a question. Yes, our liquidity is quite good. I did talk to the reasons why, especially for the Kenya business, but also don't underestimate the impact of TMB's liquidity. I think last year when we were discussing what are the benefits of acquisition of the TMB, we did talk about the large deposit franchise they have, and the bulk of which is denominated in foreign currency. So that those two have contributed to good liquidity position. And the comment on NIMs, the cost of funds is a reality. I don't think there's any bank that would stand. I've not looked at the cost of funds of the banks that have announced their results, but I don't think there's any that will tell you year on year their cost of funds has gone down. And if your cost of funds is going up, then it will have a direct impact on your NIMs. I did talk about the asset quality, asset yield, which has also come down by 40 bips, and that's because of the mix in our loan book. We have a higher mix in foreign currency in quarter 3 compared to what we had in quarter two last year. Risk-based pricing, Paul, if I may go with that, I think that's already been implemented. It's something we already got our approval, and we are matching using that framework what was approved to transmit any additional cost. At this point, it's really addition, and hopefully, as the economy starts turning, you will see that risk-based pricing will also work the other way, where you will see some reductions.
I think, Timothy, I think if you just look at, and thanks, Lawrence, risk-based pricing, the question I have for you is how many people can you charge those high rates? So the opportunity across the markets we operate in will have to be digital, low value denomination, high volumes for your best rated customers. That for me is where I see the opportunity. And that innovation of products around that area, that's the space, not just for Kenya, but across the region. So the question for us is, how do you replicate that capability across the other subsidiaries? You can look for the big tickets, but I think at the end of the day, and it's good to brag once in a while, the original credit scoring model for Hustler Fund was developed by John Mokulu's team. Testament of the capability that sits in the organization. It's worked perfectly as we predicted. Spot on. Which means if you have that capability, you should be able to deploy that capability across subsystems. That's why I see the opportunity, Timothy. Lower denomination, quick churn, repayment and turn, better pricing. You can manage your liquidity even better. Get a guy who asks you for billions, and they ask for moratorium before they start paying you. Timothy, mimi sijakuja kufanya MBA kukupatia answers kulingana na textbook. So we have to start saying, how do you diversify that book? But we have capability that we've built in Kenya. How does it start showing in the other subs? And I'm glad we are doing something with another sub. I'll keep it under wrap for now, although it's gone into trial in the market. We've got to replicate that opportunity. I think there was a question about segments. You know, Bernard, I can see you're looking at me, right? I think for us, it is that legacy book. Actually, it's not anything new, Bernard, isn't it? It's your contractors, manufacturing, and real estate, those three. Nothing new. And if you note, actually, it is the aggressive provision on the same names that took our provisions up. It's not new names. It's a tough call in June that we made collectively. And you can see the recoveries that the teams are making. And that's why I spoke about, for me, it is about the stock that is going to matter going forward. So we are going to tackle that stock. You've gone to your max. You've taken that position. Obviously, if the shilling continues to depreciate in Kenya, there will be resultant addition that you have to take. If the shilling strengthens, then there is right back for you to make. But in terms of names, technically there are no new names. It's just taking a hard position. And I think I was polite when I said, it's good when an institution makes transition both in boards and in management. Transitions internally. That is the test of sustainable organization. This institution has transitioned in management, has transitioned in boards. And we can take those tough calls. The board and management, both our group and particularly KCB Kenya, are fully aligned. Because it's the cash cow to resolve that stock. There is no doubt if you unleash KCB Kenya, top line and growth is not in question. But we have to in Kizi. That's the reality. But at the end of the day, you took debt, you got to repay. We can have a conversation about how, but we have to face the reality that we have to collect. And you can delay with the court process. Tuko pamoja? I have answered you a long way because there might be other people that had that question. The competency of the team with Bernard here, I am collector number 1, recovery manager number 1, chief customer experience officer number 1. We have to reduce that stock of NPL, not the percentage. Chairman, I think because you were in World Bank and IMF, hiyo swali inatosha tu wewe ujibu.
Thank you very much. You can hear me? Yeah. Shami, I hope that is the correct name, eh? The gentleman, yeah. I really appreciate your commendation of me. Of course, the work that you did mention that I may have done well, it was quite a sacrifice. And for that reason, when I have somebody who is appreciating my sacrificing for the country, I really appreciate it. I don't take it for granted. You did mention of some team that we have and whose names were mentioned. I can assure you, we are going to look into that together with Paul. Yes. Later. Yes. Yes. But the question you also raised about the economy, of course, our economy may not have been doing as we would have wanted. But when you look at the performance of the Kenyan economy, what I sometimes don't see our people doing justice to themselves, you see where we have come from in terms of the COVID. And you know, during that period, globally, if you look at countries like United States, UK, France, Germany, they all had their national cake, the gross domestic product, actually reduced. They had negative growth. For Kenya, we actually were able to retain our cake where it was through various interventions which the government undertook. And I believe in terms of the various interventions which the current administration is putting in place, and also trying to see what we can do to make sure the whole of our private sector is able to get back on the right track of the business, we should be able to see the Kenyan economy moving forward. And you may recall the figures I did quote in my statement and which were also given in the other presentations. We are looking at the economy growing by around 5%. Our other regional, the countries where we have the footprint of KCB, you can see they are doing equal well, and we believe through the kind of a partnership that is being undertaken within the region this is going to be positive and it will help the economy to remain still strong. Globally, working with institutions like the International Monetary Fund, the IMF, and one thing that Kenyans may need to know, those two institutions are your own institutions. They are not, they are owned by governments, and Kenya government is a shareholder. They are not like when, say, we borrow from the international financial market using the Euro board. That one is private, and therefore it will tend to be more expensive. But the International Monetary Fund, the IMF, and the World Bank, because they are your institutions, they do not, they are not driven by profit. And the income they make, the surplus, is put back into the kitty for supporting the member countries. So you find their resources are long-term. They give you money which is for a period of 40 years repayment. And the repayment is not on a bullet basis, which can be also difficult for the government when it comes to the servicing of that debt. It is on a half-yearly basis, which means it becomes much easier. And they also give you a grace period of about 10 years. The interest rate, going back to the time I was a young man working with the IMF, has never changed. It is 0.5%. On what we call International Bank for Reconstruction and Development, that is part of the World Bank, is a little bit expensive, but what they are calling a bit expensive is about 1%, which means those are the best, that is the best institution from which, particularly when it comes to public fund, public programs or projects, we needed to focus more because they are more aligned to those projects who, in terms of the return, it takes more time. It is not the same like other commercial investment that would have been undertaken. So the point I'm trying to put forward, to put here is there is a positive outlook, and when you look at even what the global other parts of the world they are doing, working with institutions like the UN, the IMF, the World Bank, it is clear things are not going to be that bad. Of course, there are geopolitical challenges which are, creating the kind of a bad impact on what we would have wanted to see, moving forward. And it happens, it is affecting those regions where commodities like oil may be coming from, or if it is things like on the food side, wheat. The issue of wheat, we used to get, as Kenya, quite a lot of wheat from Russia, but because of their fighting with Ukraine, that did have an impact on even the price because it becomes difficult to move it to this side. Now, touching on what our Lady Korio, and thank you very much, Korio, also for the commendation. Yes, I can see you. And I really appreciate your commitment to continue to support you. And as we did say in my statements, the statement made by my team here, we are there for you. And for that reason, you supporting us is to ensure that we are able to push the development agenda of each and every Kenyan forward. You did raise the question about the resources we are getting from the IMF or the World Bank, whether they are sufficient. Of course, the resources that we need may not be sufficient because given that they serve the entire membership of the world, all governments of the world, they have limits of what they give to each country, and they have a 3-year framework. Kenya has just, we have just negotiated the framework for the next 3 years with the World Bank and the IMF, and which sets out how much they are going to give to the Kenya government. Of course, it's the Kenya government when it comes to the World Bank, which would have to indicate in what areas in line with its own priority of development programs, that money would be going to. And because money can never be sufficient anywhere, even for those countries that do support us, it is not that they have sufficient. What is important is to align with your priorities. Priorities aligned with what seem to be pinching you as a country, so that those programs you want to undertake, to be able to deal with those developmental challenges you are facing, which seem to be the most painful, are dealt with. And we have a medium-term plan that the government has come in, administration has put in place, which is the basis on which the budget that is being executed, and when it comes to the resources they are mobilizing, they base it on that framework. In terms of whether it will help to reduce the debt, as I did mention, it does reduce the pressure for the government in terms of repayment. Because of that maturity period, and given the grace period that you are given, it means it creates what in our language as economists we say fiscal space, and that means you have now a room for other programs that you can put in based on even the tax that you are, you are taxing your own people without putting again too much pressure. So it has that advantage in terms of the quality of the loan and also the availability of foreign exchange. We did mention about the currency depreciating. Part of the reason for that is because relative to the demand, there has been a shortage of foreign currency. The reason being, when you look at our exports, they also may not have been performing as we would have desired. And there is also a challenge of capital inflows, even from the diaspora. That is more linked even to the challenges we faced during COVID. Because of the COVID, our people who are living in those other parts of the world, and from whom we are getting quite a lot of money, obviously they were also affected, and therefore the kind of inflow that was coming from that side is not as much as it would have been expected. So the money from the World Bank and the IMF, and in particular the IMF, specifically for IMF, is usually given for what they call balance of payment support, meaning it is to give you the foreign exchange. The Kenya shilling counterpart, if you go by the traditional principle, is supposed to be kept by the IMF, and when we are repaying, we are supposed to get back our shillings, we give them the foreign currency. Because they use the unit of account called special drawing rights. That is what we would be paying them, then they give us back our shilling. But under certain conditions, they did make it flexible where you can negotiate, and if they see the programs which you would want to use to finance with the Kenya shilling, they can allow you, and where now they require a framework to be worked between the National Treasury and the Central Bank of Kenya, because that foreign exchange is usually given to the Central Bank of Kenya to ensure your reserves are more available, and which the Central Bank can use to intervene in the market to ensure if there is a shortage, they put that money into the market to help to make sure the exchange rate is not moving in either way in the wrong direction. But one thing that I would like to, as I close up, to make clear, our people, when we talk about depreciation, we have been talking about it in a very negative. You see, what is important is not depreciation or appreciation per se, because yes, depreciation gives the impression as if the value is going down, and when you are saying it has gone up, it is like the value has increased. Yes, but to you as a business person who is selling your goods out of the country, what you would want is from that $1, because you'll not be using that dollar here in the country as your unit of account, you want a bit more shillings. So what is important is to ensure the movement is one which is stable and predictable. Otherwise, it is not that the currency, when it is too strong, it is not also good. It becomes a factor that discourages export business. So we normally do in our financial programming have a framework within which you ensure you maintain the rate to move along a corridor that will not destabilize economic business by way of, again, moving into the direction it has moved it, currently. That is, of course, different. It should not, again, jump. If it is moving just gradual, you are able to predict. It means then you can be able even to be planning your own activities without any problem. So I hope that has helped to support to what Salim.
I don't want to head into this El Nino Maneno. I can get into trouble. But I think one of the things I like about what we're doing with the foundation and through Rosalind's team and through the executives is working with our branches. Because we are everywhere. So if Mandera is flooded, it is better to support Mandera people through our Mandera branch. They know better where the effect is and they know how to deploy that, not just from the head office. So Anastasia's team allocates support directly to those branches to react. So we are involved. Because otherwise, they are our customers, they are our people every single day. We have to try and support. Some stories are not told. Food is not getting to Mandera. Wajir is cut. How do you get that, that to happen? So we have to try and find different, unique ways. Business is sustainable, business is meaningful if you are relevant to the communities that you operate with. So I can assure you KCB is relevant to that level, the branches. And I know many times people don't appreciate how powerful KCB is. But let me close answering you by saying, some of our branch managers are more known, more meaningful to the community, to the extent that the branch manager of Marsabit is more meaningful to Marsabit than myself, because he's there every single day. Every single day. Some of them used to sit in district security committee. I've learned to let some of them sit in, because of the trust, they sit in the land committees. They're called what? Land boards of, because they're trusted. They are not. That's what KCB stands for. So we will be there wakati ya kiangazi, wakati ya mvua, wakati ya jua, na wakati ya mvua mingi. That I can assure you. Both through the foundation and the branch networks. And that includes NBK. So when I say KCB, unajua group, mimi KCB ni kila mtu. So I'm speaking for TMB, I'm speaking for BPR. So sometimes when I speak in Kenya about KCB, people think I'm just speaking about KCB Kenya. No, group ni KCB. Allow me to clarify that. So National Bank, there's National Bank in Mandera. There's KCB in Mandera. The two must work together to deliver for that community. We don't duplicate efforts. There's KCB in Wajir, there's NBK in Wajir. We have to support each other. You've seen in events, nowadays that may quite confusing. All events we sponsor, it is NBK and KCB. We don't compete, we complement. Right? Kuna first born, kuna second born, kuna kijana, kuna msichana, and I don't know what gender, but we work together. Those two brands have worked together in this country. And we'll continue to do that until the day, as I promised, I'll come here to say what we are doing. Yeah? Jafet, niliona ukifanya hivi na kwetu ni kusema umenota. Thank you. I think, Judith, we can close because we've got some interviews to do. Some members have to travel. I could see a few other shareholders raising hands. Tutaweka siku ya shareholders. Kwa GM Chami and team, thank you so much, everyone. I can see. Wacha wasimame, I know them. Naona wazee wa Meru, naona wa Thika. Yeah. Please give them a round of applause. Thank you so much. Chami, you know sisi tunakurecognize kila wakati. That's the company I work with. Thank you. Whatever you do, you shall have one day and we come to you. But we shall pass. Thank you. And I like Chami, hakuna bank ingine inakuonyesha for people for better. We are the ones who do all. So, hiyo ni muhimu sana. Thank you, Chami. God bless you.
Thank you.
Allow us to close, Judith, back to yourself.
Thank you,
We truly thank you.
Thank you, Paul. Thank you, Group Chairman, and thank you, Lawrence. So we are now coming to the end of our session. Thank you for being patient and listening. For the analysts, we have David Kitheka, in case you want to have a word with him. And for the media, we have Peter Mwaura Kimani, who is at the back also. He'll be able to support you for any information that you require. For now, we have come to the end of our session. We have some biting, so grab something before you go. You might be in traffic, and you find that you're hungry. So bite something before you leave. And for our team who are on the stage, we want to take some group photos with you. So thank you, and have a nice evening.
Thank you, Judith. I think just to say, David, we have investor call on Monday at 4 p.m. So we'll keep questions for the investors too. The normal investor call Monday 4 p.m. so that we don't repeat those. David, thank you.
Thank you, Sam. Photography.
Well done, gentlemen. Yes. Well done.
Wants to hold the key to equality. Let's take those to places where they are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizon. Doors should not hold out opportunities.
Which is basically the old one.
Kesho tena ni kinaturamba. We rest January.
Kwani zimepotea tena? Sasa